Cryptocurrencies have been successful for the past few years, but it seems like 2022 won't be living up to that. To say it plainly, cryptocurrencies are off to a bad start in 2022. A lot of factors are contributing to this potentially bad outcome, and it's going to be undoubtedly hard for cryptos, even the popular ones, to catch up and gain good momentum for this year. It's going to be really tough for all investors too, so it's important to know why cryptocurrencies are off to a shaky start this year. But first, hello and welcome back to the channel. This is Financial and Investment Wisdom, and we're back with another incredible video. Here, we talk about the world of cryptocurrency, finance matters, and investments. So please subscribe to the channel and enable alerts to be notified of each new upload. Many experts have already said that cryptocurrencies are going to crash in 2022, and while that may be hard to believe since crypto had amazing progress and efficiency last year, we probably should have started believing it sooner. There are many pieces of evidence and a handful of expert predictions that prove cryptocurrency's unfortunate fate for this year. In this video, we will tell you all about them. So, what are we waiting for? Without further ado, let's begin. History suggests that reversions are commonplace. And so, to begin with, the crypto market's history implies that it is in peril. Despite the fact that large upswings have occurred frequently during the last decade, reversions are typical. The entire value of all digital currencies has increased more than 14-fold to $2.14 trillion from the bottom in March 2020. This is similar to the 35-fold gain in overall market value between March 2017 and January 2018, which occurred over a 10-month period. However, following the January 2018 high, the total value of all cryptocurrencies fell by about 90% over the next 11 months. We've seen comparable reversions in specific cryptos that have resulted in life-changing wins. Popular coins such as Nano, XRP, and Litecoin saw short-term rises of 24,000% to roughly 462,000%. In a 12 to 26 month period, all of them lost 93% to 99% of their value. The point is that in the cryptocurrency market, trading euphoria always regresses in a huge way. Cryptos are having a hard time decoupling from the stock market this year. The difficulty of cryptocurrencies to separate from the stock market is another reason they may crash in 2022. Digital currencies are considered autonomous assets and a hedge against the broader market in many ways. Bitcoin, for example, gives the impression of a limited token supply, which is capped at 21 million. With the money supply in the United States soaring, investors see Bitcoin as a safe haven investment that will help them store and grow their wealth, at least better than the ever-diluting dollar. The issue is that when the stock market crashes or corrects, cryptocurrencies haven't fared well. The S&P 500 approached bear market territory in the fourth quarter of 2018 with a 20% drop. During the same time period, the total value of cryptocurrencies plummeted from around $222 billion to around $130 billion, a 41% loss. During the 5-week coronavirus crash in February and March 2020, the crypto market was also hammered. We issue this warning because an increasing number of indicators point to the stock market collapsing or experiencing a double-digit percentage correction in 2022. Blockchain euphoria outpaces its use case. People have every right to be excited about blockchain technology's future potential. DeFi allows for almost instantaneous cross-border payments at low costs, and it can democratize the process so that even residents of emerging markets can participate. Smart contract-based blockchains have the potential to transform supply networks. But if there's one thing that every next big thing technology has in common, it's that investors consistently underestimate how rapidly a new technology or service will be adopted. With the advent of the internet, business-to-business commerce, genomics, 3D printing, and now blockchain technology, we've seen it happen. While blockchain is fascinating, it is still not widely used or even close to being widely used. Businesses are reluctant to jump at the possibility to finance large-scale projects until there is proof of their efficacy in the real world. However, we won't have this proof until enterprises embrace blockchain. It's a bit of a conundrum. Hey friend, we've made it halfway through our video and we sincerely hope you've enjoyed it thus far. If you have, please give us a thumbs up and turn on notifications to be notified of new uploads. What do you think of the items on the list so far? Let us know your opinion in the comments below. Let's move forward with the video. Margin depth wreaks havoc. A fourth reason why cryptocurrencies may fall in value in the coming year can be found in margin debt. The amount of money borrowed with interest by investors to buy or short sell stocks is referred to as margin. Investors that use margin to leverage their transactions can boost their profits in some cases. However, if the securities purchased on margin do not move in the predicted direction in the near future, the brokerages that provide the loans may contact you. Investors will be required to put up additional capital as collateral, or they may be forced to sell assets. This is known as a margin call. Because the crypto exchange market is so fragmented, it's difficult to know exactly how much margin debt is owed. However, make no mistake, invitations to use leverage aren't hard to come by. Certain individuals were able to use 100 times leverage on their cash position when trading Bitcoin earlier this year. Even a 1% or 2% move in Bitcoin, which happens frequently in the blink of an eye, might result in a margin call and force liquidation with such high leverage. Margin calls could be on the horizon if the Bitcoin market's music suddenly stops. Meme coins are losing their charm in 2022. Shiba Inu may be one of the year's most popular digital currencies, but its popularity on social media doesn't necessarily translate to real-world appeal or long-term potential. Shiba Inu is an ERC20 token developed on the Ethereum blockchain, which means it's vulnerable to the same high fees and processing slowness that plagues Ethereum's network. Nothing about Shiba Inu, Dogecoin, or Floki Inu suggests that it will become the preferred payment coin for businesses in an increasingly congested area of blockchain ventures. If the FOMO that has pushed investors into meme currencies fades, we could see crypto enthusiasm fade as well. Don't be shocked if in 2022, the popular fear of missing out or FOMO actions suffocate the Bitcoin industry. The coin named after the Japanese Shiba Inu dog breed has been hit this year. Through December 13th, the aforementioned Shiba Inu has increased by more than 45 million%, while Dogecoin and Floki Inu have increased by 3,119% and 2,763% respectively. But all of these meme coins have one thing in common. They don't have anything approaching a competitive advantage. Crypto winter. Some cryptocurrency investors believe the worst is yet to come as a result of the steep sell-off in Bitcoin and other digital currencies. Bitcoin, the world's most popular virtual currency, fell below $33,000 on Monday, reaching its lowest level since July. It has subsequently rebounded beyond $30,000, but it is still down about 50% from a record high of nearly $69,000 in November. Meanwhile, since Bitcoin's all-time high, the whole crypto market has lost more than $1 trillion in value, as top tokens like Ether and Solana have followed the #1 digital currency to trade dramatically lower. Since its peak in November, the value of Ether has more than halved, while the value of Solana has plummeted by 65%. Some crypto investors are now speculating about the potential of a crypto winter, a term that refers to big bear markets in the digital currency market's short history. The most recent instance of this occurred in late 2017 and early 2018 when Bitcoin fell by up to 80% from all-time highs. The former head of crypto at Facebook parent Meta, David Marcus, seems to accept that a crypto winter has already arrived. In a tweet on Monday, he remarked, "It's during crypto winters that the best entrepreneurs build the better companies. This is the time again to focus on solving real problems versus pumping tokens." Alright, we have demonstrated to you the main reasons why cryptocurrencies are gonna have it rough this year. What do you think? Would you still like to invest in crypto? Let us know in the comments. That concludes today's video. Please subscribe to the channel and enable alerts to be notified of new uploads. This is financial and investment wisdom, and we'll see you in our next video.